Thanks, Christy. Thanks to the Pay Dirt team for having me up again. We've got a great story. I think it's a unique one on a global context in the lithium space. And it's a great pleasure to be here to present it. So what makes us unique on a global context? I think first and foremost, we've got a 50 million tonne resource across two wholly owned assets here in Western Australia. And within the world's greatest mining jurisdiction, being WA, we've got these two assets in arguably two of the most prestigious mining jurisdictions. So our first project up in the Pilbara, our Marble Bar Lithium project, and our second project out east of Kalgoorlie, the Mana Lithium project. So we're incredibly thrilled with the progress of these two projects, particularly on the back of a very significant exploration campaign last year. And importantly, we own them wholly outright, two of only 14 lithium JORC compliant resources in Australia. And importantly, it's hard to get to JORC compliance. Exploration certainly comes with risk, and we've got two projects that we feel are world class. There's significant additional tonnes to come across both of these projects throughout the 2023 drilling season. Importantly, we've got a great infrastructure at our disposal. Both of these projects are located in brilliant areas with easy access to a combination of sealed roads and also rail access, so we can get our products to port first and foremost. We've got a really strong team. I'll talk about the team in a minute, because it's one thing having a fantastic resource, but it's another thing entirely being able to get that resource to market and having all those key relationships within the sector. So we do have some amazing shareholders, strategic shareholders, two blue chip counterparties on our register, being Suzhou, so you're close, Christy, which is a controlling shareholder of a company called Yibin Li in China. And this company currently owns around 110,000 tonnes of lithium hydroxide conversion capacity. So they're a wonderful partner and give us really great access to downstream lithium expertise. And of course, Mineral Resources, a company that is world class in terms of their upstream lithium processing capability. So we're thrilled with those two partners. Importantly, one of the previous speakers talked about offtake. We cherish that. It's a weapon for us. We only have the one offtake deal. That's with Suzhou TANA, and importantly, it's at market pricing from day one, which is important. And our view is the market is going to be stronger for longer from a pricing perspective. So we're thrilled to have market pricing. And certainly we are in discussions with a number of global counterparties around potential offtake deals, but certainly we'll do the right deal at the right time, certainly in the interests of our shareholders going forward. And we talked about jurisdiction. I'd just like to present the board now. Really strong board, a great complement of technical, legal and commercial expertise, and importantly with the likes of Greg Lilliman, who was 2IC at Fortescue Metal Group. His operational excellence has been something I've lent on throughout the course of the last 12 months. As a board, we've delivered close to $100 billion in resource projects across multiple jurisdictions and have close to 170 years of resources experience here in WA as a cumulative. Really pleased with the appointment of Matt Allen, who's going to be coming across from Hastings Metal Group. Matt will start with us next month, a very experienced ASX-listed CFO. Team's important. I've been working really hard over the last 3 or 4 months, sort of building out these 3 core pillars for us. We're moving very quickly into development. Whilst there's significant exploration upside across both projects, we are getting on with development. So those 3 key pillars really are project development, first and foremost, scoping, and we've got a DFS that's soon to commence, led by Dr. Tony Chamberlain, very experienced project director and a PhD in metallurgy. Stuart Peterson leads our geology and exploration activities across both sites. And Stuart sitting under him, we've got 3 project geologists and a couple of in-house fieldies. So a very strong geological team. And I think in Stu's team, close to 80 years of cumulative experience in lithium. Most of our geos have held or have drilled out most of the lithium targets here in Western Australia. And then we've got the approvals team, a really strong approvals team. And most companies would be lying if they didn't say approvals was critical path. We think from a technology perspective and a geological perspective, we've got brilliant resources that we'll be able to process and take into mines of the future. But approvals is critical path, and we've got a really strong team in this space with accountability across government affairs, of course, environment and native title and heritage. And safety is important as well, and we're thrilled with the progress from last year's drilling campaign. One of the largest lithium exploration campaigns globally, more than 85,000 metres of exploration across both sites. At one point we had up to 4 drill rigs operating and 0 LTIs, so we're thrilled with our safety performance. Just a snapshot on the company. It's a tightly held register, only 257 million shares on issue, a market cap of around 300, and again, that register consists of a couple of core strategics taking about 20%. We've got a couple of high net worth individuals taking 12%, and then board and management with skin in the game of about 4.5%, and then the balance is a combination of retail, and we've got about 18% institutional at the moment. Importantly, we've got a really strong cash position. You know, we're really fully funded through to FID next year in terms of our Mana project. So we've got a significant work stream ahead this year in terms of exploration, but also project development. And I'll get into that shortly. But last year was an incredible year for the company. As I said, we executed one of the world's largest lithium exploration campaigns, and that culminated in a very significant increase across our resource base. So I talked about that 50 million tonnes across both projects. It was a phenomenal increase, and particularly with our Mana Lithium project in the Eastern Goldfields, that's the project we're looking to develop this year, a 230% increase. There's more to come. That's a big asset, and there's significantly more tonnes to come across that asset throughout the course of this year. But our view is we don't need to wait till we get to a 100 million tonne resource. We could have spent all of this year drilling, boost the resource. We're ready to go, and we're a company that's doing. And I think that's really appreciated by the downstream partner discussions we're having, because those customers need lithium. They need lithium units now. So we're going to push on with development, and of course the resource will build throughout the course of the next couple of years. So let's talk about Mana. This is a photo of our exploration camp. Brilliant place to be mining, Eastern Goldfields. It's semi-arid desert country. There's no permanent surface water, so from an approvals perspective, we are forecasting it's going to be a relatively straightforward process. And again, from a heritage native title perspective, again, this is the perfect jurisdiction to be building a mine of the future. It's relatively flat topography, and we will have an open pit mine that we take forward into development this year. So just a bit of a recap on the history of the project. We acquired the project back in late 21, under a joint venture arrangement. We then embarked and delivered a maiden inferred mineral resource in February of last year, so about 12 months ago, of 9.9 million tonnes at 1.14% lithium. We then embarked on a very significant exploration campaign, culminating in a significant increase in the back end of last year, but we also acquired 100% ownership of the asset. The remaining 20% was we acquired on the back of an institutional placement last year off Breaker Resources. So having 100% ownership of this resource really allows us to develop it unencumbered. I talked about the resource upgrade last year, and then most recently we've delivered a scoping study to market. That was a 4-month piece of work. And to my knowledge, you know, that is one of the fastest work streams to be able to acquire a project, develop a maiden inferred mineral resource, explore, increase the resource almost 3 times, and then execute a scoping study all in a 12-month period is quite remarkable, and credit to our team. We have also announced the results of a scoping study which show, you know, tremendous financial returns. In my knowledge, this is, you know, one of a project that I think stacks up across multiple areas, and as a result of that scoping study announcement, there is phenomenal interest on the downstream. There is upside, as I mentioned. Just talking about the exploration here, it's really a simple task of drilling this target out. There is significant tonnes to the northeast extension that we'll focus on drilling a combination of infill and extensional drilling this year. And at the moment, the scoping study is really just capturing the pit shell, as you can see in this diagram. We've got close to 70% of the total resource now into an indicated classification. We will have an ore reserve and a PFS out this year in Q3, and we'll be concluding a DFS in Q4. But there's big tonnes to come, and we've had some of the highest grade and widest intercepts on that northeast extension. So we'll chase those tonnes throughout the course of this year, and we're likely to have a second pit in our total DFS design at the balance of this year. So that'll do a number of things. It'll increase the total head grade, decrease the strip ratio, and we'll have significantly more tonnes coming out the back end of the future plant. Talking about that northeast extension, it just shows you the current pit design, which the scoping study was announced on. There's only 18 million tonnes of our total 32 million tonne resource in that pit shell. And as you can see here, we'll be focusing these northeast extensions where there's a lot of shallow tonnes up on that northeast extension as well. So Stuart and his team will be getting busy very soon. So let's talk about the scoping study. We moved quickly on this scoping study. We used a company called Minsol Engineering, who an incredibly experienced team. Rob and his team at Minsol. A lot of experience in metallurgy and process engineering capability, significant experience in lithium. In fact, that team has got about more than 10 plus years of experience on the Talison asset, the Greenbushes ore body. So very good understanding of metallurgy, but most importantly, flotation and DMS as well. So the key outcomes here, and just talking about some of the key results, 2.8 billion MPV. We've used an 8% discount rate here because the majority of our funding for this project is going to be met by customer capital prepays. Again, we thought we'll be doing the right deal at the right time, but certainly there's very strong interest and very strong support around capital prepays, and these are significant investments. We're talking up to 100 to 150 million US for each counterparty. So we'll be announcing deals in due course. It's got a current 10-year mine life, but we certainly feel there's options to extend that. We think we can double that at the back of this DFS on the back of more tonnes, but we're also adopting ore sorting to go forward, which will increase the throughput. It's a scalable project, a 2 million tonne run of mine on the primary jaw crush. We'll be producing about 220,000 tonnes. Currently, we think we can probably add 15% production on the back of the ore sorting. We're currently running trials, and it's a 5.5% concentrate. And again, talking to our downstream partners, 5.5% con is more than sufficient. We own this asset outright, a 15-month payback, which is quite remarkable. It stacks up even on the low end of the forecast spodumene pricing, and globally competitive OPEX and CAPEX. We've got a life of mine OPEX here of less than $700 US a tonne. There's opportunities there for further optimisation, particularly around the mining. And the IRR, again, is quite impressive. We have done a sensitivity analysis here, and no surprises. Obviously the exchange rate, we're assuming a 0.7 versus the USD. And of course, the spodumene concentrate price has the biggest impact. But my view, again, stronger for longer. We've assumed a long-term price average here of 2,500 US. And again, that's based on fast markets, long-term average between 2026, which is when we're going to have our first production, and 2032. Importantly, the project's very resilient to CAPEX. We've used Q1 2023 pricing. More than 70% of the pricing on the CAPEX was based on real quotations. It wasn't a backward-looking database. So we're really pleased and we're thrilled. And very competitive position around the CAPEX, about 420 million less of pre-strip. So next step, DFS. We have awarded the engineer, a very experienced consultant who has got more than 100 years of experience in lithium within their team. They're local, a very strong team, and we'll be announcing that throughout the course of this week. But we are moving straight to DFS. We've got enough confidence in this project that this will be a mine of the future. As I mentioned, we will be releasing a PFS and an ore reserve in Q3 as part of this program, but we are doing significant additional drilling as well, as I mentioned earlier, about 30,000 metres of drilling, RC, and about 6,000 metres of diamond across this particular resource. The metallurgical test program's underway. We think it's a really robust flow sheet. Currently, it's a float plus DMS circuit. We'll keep exploring that throughout the course of this year, but we've got very, very consistent metallurgy and grades throughout the deposit. So the team did a brilliant job last year collecting around 2,000 kilos of pegmatite core, which has been used for the DMS, and we're currently doing the DMS program with the Nagrom lab, the most experienced lithium met lab on the planet, and that's been supported by Wave International. And of course, our environmental heritage and native title approvals are ongoing. Those work streams are ongoing. Again, our approvals team is keeping very busy. We do have two projects, so whilst I've spoke a lot about, in the interest of time, I'll get through this very quickly before Christy taps me on the shoulder. But our Marble Bar Lithium project, wonderful jurisdiction. We've got 18 million tonnes at 1% in this resource. We'll continue exploring this resource. It's a very large, complex system, but again, it's got some access to some brilliant infrastructure. We're drilling currently about 30 metres off the Port Hedland Road. It's only 160 kilometres to port. But as you can see here, we've got a very significant land package. We've only drilled a very small portion of this. The Goldilocks zone suggests there's some excellent targets for lithium mineralisation on the northeast and on the southeast. And that'll be the focus for Stuart and his team once we move into the exploration journey this year for Marble Bar. So more upside to come. And again, this is our long-term deposit, as we refer to it internally, our sleeper project. I think there's tremendous interest in this project as well, given its geographical location. So just closing out, a busy year ahead, exploration across both projects, DFS underway, PFS will be included in that, of course. Resource upgrades will be coming to market periodically as we continue to get drill data and assays. The MET test program, critical piece. You know, we're glad we've got a head start on the MET program, because that will really underpin a really tight flow sheet, and that will ultimately de-risk the project from a capital and a schedule perspective, which is most important. Approval's ongoing, and so we're segueing to an FID next year with construction to commence soon thereafter. So busy 18 to 24 months ahead for the company, but we're off to a great start. We've got a wonderful foundation, and as I mentioned, a really fantastic team built to execute. So I'm about a minute over, but apologies. Thanks very much.